We discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make some or a lot of money on the internet. Loaded up for discussion today. We've got crypto kind of steadying here as chances of September rate cut are brought into question a little bit. Trump's meeting Zelensky after his meeting with Putin in their pursuit of peace. We'll touch on the latest updates in that direction. We've also got Chamath, famous investor, former early employee at Facebook, announcing a new SPAC, American Exceptionalism, focusing on energy, AI, defense, and decentralized finance. We'll get into some of those very interesting details a little bit. And finally, strategy changes its financing rules to allow it to sell master equity ATM if the MNAV falls below 2.5x. Funky is throwing the down thumb sign. We'll get his take as our resident Bitcoin expert in just a little bit. As usual, we've got the price action on crypto and NFTs, plus a general discussion on what is going on in the attention market and the general crypto market. So stay tuned for that. I've got Rahim in the co-host seat with me today, and we've got Funky up top too. Cannot wait to get into it. But just a reminder, friends, before we do, nothing we say here is financial advice, because the market goes up, it goes down. We do not know what's going on for sure. So please proceed with caution and exercise your own judgment. This is not financial advice. With that out of the way, Rahim, it is Tuesday. It's the 19th of August. How are you doing? How are you feeling, my man?
GM, everybody. There's something I want to point out, which I've never said on the show. I'm so glad that you, Funky, and Ledge are the only three people who pronounce my name right. And it's so nice to hear when people call me Rahim and not Rahim. So a lot of British people actually get it right, but people still call me. So I always appreciate that.
Dude, I think, do you know why people would say right? It's because I think, without patting myself on the shoulder, I started saying it right, but I'm pretty sure I said it wrong for ages and ages as well.
For ages. Yeah, it could be. Maybe you heard me introduce myself and you were like, wait a second, I think I'm saying your name wrong.
Got 7 in the chat throwing the down thumbs as well. I think we're not taking that slander against British people well, Rahim. I think the Brits in the audience
I'm saying usually British people get it right. It's like the opposite. I'm gassing you guys up.
Oh, okay. 7. It's not bad. Can throw the thumbs up, maybe. I don't know. Maybe he just disagrees anyway. We've got Notorious Big Bull in the comments. Guilty. I thought it was pronounced Rahim. That's you're not the only one. You're not the only one,
like,
man.
The spelling is wrong. But anyways, it's been a good week. I had a very rejuvenating weekend, and it wasn't something like I've been reflecting a lot on it. I didn't go on like a vacation. It was nothing extravagant. I was out with my high school friends. We were just like chilling at home. We cooked together, played some video games. Like we were just like being stupid. We were being silly. Like, like no big talk about institutions or smart contracts or treasury companies. And low-key, like, I came out of it and I was like, wow, it feels nice to like not have to always, like, I feel like in this space, we always feel like we need to have like good opinions to either bounce off of each other, make investments, this, that. But it felt really nice just being like in the moment and just having fun,
Yeah, when you were telling me this before the show, I just started laughing because it sounds like you just discovered what a holiday is, which clearly is an alien concept to everyone in this industry. It's just like, oh wow, I took a break with some friends and didn't talk about work. What an incredible discovery that I've made in life. I think that's part of the funny aspect of what you said. And then I really resonate with the second part as well, like the idea that you're able to just switch off. And as you said, we've got to try and be smart all the time. You've got to be alert all the time in this industry as well. One of my favorite quotes, I think it was Kobe said this, or like as one of the learnings of like how to manage in the industry, is everyone moves super fast to try to make more capital, but no one moves fast enough when you need to protect it. And I think that like core feeling of always being alert in this industry is really, really tiring when you think about it. And it's only when you step out for a period of time that you manage to appreciate like the stress that you're under just by existing in this universe where protocol might get rugged or the NFT founder might disappear.
Mm.
You know, so there's just a latent stress, I think, as
Yeah.
participating in this incredibly volatile industry. And yeah,
No,
being
you're
able to
spot
speak about
on.
it is really
Yeah.
nice.
Yeah, you're spot on. I think there's also this, and this is something I used to talk about before. When you're doing something that you passionately love. So let's say, like, if you play basketball, you're an NBA player, you are a radio host, and you love that. There's also like almost like this weird thing that we put on ourselves that if I love this job, I can never be like, oh, today I don't feel like playing basketball. I don't feel like playing, like, going on the radio today, because like it's like from the outside everyone's like, what are you talking about? Like, this is something that you love. You wanted to be an NBA player. How are you saying this
Yeah.
Sunday do you not want to play? And I know this is something I have a friend of mine who is an RJ, and she would tell me that being an RJ once, like, she had someone who passed away in her family, but she had to be that high
Wait,
energy,
what's an RJ?
like a radio jockey.
Oh, okay.
uh, and she was just like, I had to be on the radio and high energy and forget all of that, because you can't be depressed on radio, because like,
Yeah.
people don't expect you to do that. So yeah, it is definitely fascinating. But yeah, I guess discovering vacations is a is a funny way to put it.
Exactly. Yeah, I can see a lot of people resonating with that in the audience. I think, yeah, we're in a pretty stressful industry, and particularly on the creative side, as you started to allude to there. One, there's the trading side, which can take a lot out of you mentally and create kind of this latent stress. But then when you go and put yourself out there on the creative side as well, like dealing with the expectations of other people, which, to be honest, I think you should broadly ignore. But then, just being slightly self-conscious about putting yourself out there all the time. And as you say, maybe you're going through different things in life, but other people don't know, and maybe they don't even care, because you feel the constant expectation to deliver intelligent stuff. We were talking about that
Mm,
before the show as well, like this expectation to be smart, to say
mm,
something that's gonna either make someone's investment go up or help them make a better investment or onboard them into Web3 in a proper way. And so, yeah, there's that kind of additional pressure all the time, which, to be honest, we're just reflecting on it here. I still wouldn't swap it for anything. Wouldn't swap it
mm.
for anything.
Agreed. 100%.
I feel it's part of being in the arena, like you can either choose to be in it or you can choose to be out of it. And I'd much rather be in it and just figure it out as you go along. But I think
Yeah.
that's probably rings true
and,
for a
and
lot of people.
Yeah, and you got to put in like the work. And like before we jump to all like the crypto stuff, we were briefly talking about like this Friday, Alex Hermosi dropped his like new book. Man, I've like been so obsessed with everything, like his whole campaign and everything he's been doing. And he's kind of doing the exact same thing we're talking about, but obviously not in the crypto world. So he dropped his book on Friday live. He's sold 77 million US dollars worth of books, and his advertising money for this entire campaign, for this event that he had been preparing for, was like $4 million and stuff. So he could essentially like 20x his money, obviously keeping aside the printing cost or whatever. But like I think everyone in the audience, everyone who's in the Web3 space, should kind of like just spend some time. I'm not even saying you need to be like a big fan of him. It's just that like it showed that that guy has worked on distribution.
Mm.
You've built distribution over the years on different social media platforms to basically get thousands and thousands of people to show up live, buy your book, stay. He was live for like 5-6 hours, and then like literally he was live the following 2 days again for 5-6 hours. Like, it's insane. But it kind of just shows and goes back to what you were saying, that yeah, wouldn't change it. And in some ways, like, you need to be like that weird power hungry person to actually kind of do something significant. But it's just been like something I'm feeling very inspired about, and pretty interesting to kind of observe of how he's built his distribution.
One follow-up question on that, Rahim. I don't know how close you were to the launch, but I think this would be interesting for people, because I'm not that plugged into the Web2 side of things in that direction. If there was one key learning that you could glean from how he either did that marketing masterclass to sell all of that amount of stuff, like what would you say that it was?
So he did something which he always talks about. Like, if anyone's ever watches like podcasts or videos, is as essentially the idea of upselling services and upselling whatever he's doing. You remember back in 21, 22, when Gary Vee did that campaign where he was like, you buy these many books and
Yes.
stuff. The struggle that everyone had was, where do you keep these books? So he did the
Yes.
same thing, but he solved for that. So he had this thing where if you pre-order like the one book, it gave you an option to buy, I think it was 200 books. but you don't have to keep the physical 200 books. They will give you 200 codes that you can just give it out to people that they can put it and get it shipped to them. And then once you bought that, there was another section where you could buy, I think, 800 books, but it essentially gave you access to a lot of his team. So he was like, you can buy these 800 books. You don't need to have them physically 800, but for the next 6 months, you're going to have access to this team, this, that. And he focused heavily on, which is funny because obviously we talk about this in Web3 all the time, that he's very focused on like building his community out in like a way more interactive way. So his that 800 books proposition was for the next 6 months, him and his team will be active in whatever that social channel is, which I'm not really sure of, is that we will like support you. We'll have like conversations back and forth, like a two-way channel and stuff. So pretty interesting to see that. At the end of the day, he spoke a lot about community building, which is kind of awesome.
Very, 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 very interesting. Excellent lessons there. Might dive in a little bit more to find out what they did, because you got to take note when you're in any industry. Frankly, when someone moves that amount of product, I think it's worth taking note. Definitely agree with the community focus, though. We're trying to, ourselves build out a lot in that direction. I just think it's a long-term game. You got to really enjoy it to go in that direction. So that's my key thought at the moment. Right, let's get into the main stuff as usual, guys. Want to get you up to speed with everything you need to know. I enjoyed that little detour into a bit kind of Web 2 general reflections on how we're feeling about the rest of the industry and other opportunities that we see online. But let's get into the main stuff to get you up to speed with the price action first, starting with the majors. We've got Bitcoin flat at around 115,000 United States dollars. Got ETH flat as well at just under 4.3K. Got XRP up 1% to $3. Got BNB up 1% to 845. I have a feeling, just looking at this, BNB's, everything was down a reasonable amount, right? But BNB's up 5% on the week. This is very, very close. I'm just showing you the chart on screen. BNB is like right up there at all-time high. BNB's all-time high, it created a new all-time high at $855. And now it's just at 845. I'm just seeing last cycles. Yeah, okay. So BNB is doing fantastic. Really, really strong. Solana is around 181. We've got Cardano up a couple of percent to 93 cents. And you also have Hyperliquid flat at $43, whilst Sui is up 1% to $3.60. On the meme coin side of things, we've got Doge down 1%, Pepe flat, Pengu is up 1%. Then you got Bonk, which is more or less flat, SPX down a couple of percent. Pump Fun has dropped quite significantly, down another 7% to 2.9 bill. That went up as high as 4, back to around the investors' ICO kind of price. So it's dipped a reasonable amount again. Fartcoin's up 1%, WIF is flat. Mostly kind of sitting in this single digit region, a little bit split between the majority of memes, up a little bit, down a little bit. Nothing really of note that I'm seeing here. Getting into the main headlines themselves, which we'll be discussing in a bit more detail today. We're talking about crypto steadying, as maybe the chance of September rate cuts are falling. Obviously got the Jackson Hole Symposium coming out later this week. I'll just explain what that is and why it might be important. Chamath has announced a new SPAC. Chamath being the very prominent ex-Facebook early employee, very big investor, famous for now his appearance on the All In podcast. The SPAC is called American Exceptionalism, focusing on energy, AI, and decentralized finance and defense. So definite some crypto exposure there. We're interested in that. But is that a top signal? Is one of the things we'll be reflecting on once we get some of those details. And then finally, we'll be talking as a headline, strategy changing its financing rules to allow it to sell master equity ATM if the MNAV falls below 2.5x. Funky, I can see you reacting. Maybe I'm going to pass that over to you a little bit later if you'd like, so you can tell us what we really need to know on that section. That'll be towards the end of the show. Getting into some notable sales, CryptoPunk still selling strong, although has been a pretty big sell-off. The floor price is much lower than what it was. I'll bring it up in just a second. Got Beeple selling for 13 ETH, Snowflow Chromie Squiggle selling for 5.5. And across the rest of the board, we've got Tom Lee's Bitmine buying another $1.6 billion of ETH. The BTCS ETH Treasury Company announcing its first public company to issue a dividend in ETH. That's pretty interesting. But I do want to talk more, once again, on treasury companies as part of that conversation that we do with Funky later, because Blockworks have a very good dashboard, which I think is important for everyone to get familiar with as we try to understand like what is going on with these treasury companies. So I want to dive in there a little bit later. We had a $1.72 trillion China Merchants Bank subsidiary launching a 24/7 Bitcoin trading in Hong Kong. Meme coin launchpad Heaven reportedly committing to use 100% of its protocol revenue forever to buy back its Light token. Rahim, does this make any sense? Like when 100% of its protocol revenue, what's the thinking here to not make any money?
It is like the most hilarious thing. And like the token is up. Obviously, like the markets likes it. It's bullish. It's trading at an all-time high of, I think, 160, 107 million market cap. I did trade it for a bit. I am out of it. It's just that, like, I don't know, man. I feel like this is like the NFT platforms thing all over again, where everyone's kind of just like launching launch pads. And there's a two-way playbook. Is either you pick one coin that has launched in your ecosystem and you put all that money in and kind of bring attention to your launch pad, or you do exactly this. Like, it's insane to me what they're like their revenue forever to buybacks, which is like, how do you grow the company? Like, what's going on?
I wonder, sometimes do people say, okay, well, we're not going to make any money on revenue, so we'll give that back via token buybacks, but maybe from trading the token? Are they like, do they have a ton of the token and then they're providing liquidity and they make money off the liquidity? But like, look, guys, this is not a business. This is not a traditional business model where you forego all of your revenue.
Yeah, unless they have, like, I don't even know, and I'm basing this off the top of my head, that I wonder if they have a huge allocation to their own token.
Yeah. So that's
they're like, yeah, we're going to just like dump the token as we buy back from the protocol and kind of pump the price. And yeah, it has to be that, which is, what's funny? This isn't very different from how the NFT business model is. Like, if you just think about NFTs, usually you would have like projects that, okay, you had some projects that would end up like holding a bit of supply, but they would end up selling the entire thing. Yes, you were relying on like marketplace fees, but like a lot of marketplaces essentially revoked those fees as well. So essentially, like, I know the Nakamiko's contract holds a bunch of them. CryptoPunks, obviously the most well-known contract, ended up holding about like 1,000 punks at its peak. But yeah, interesting. I don't know, man. I don't get the space sometimes.
Yeah, like I mean, I don't know. I'm looking for any comments. I haven't seen any comments kind of suggesting what the longer term business model might be there. Would be curious for anyone to share either in the YouTube comments or the Modern Market comments on the Twitter space. Like, if you do know what the plan is there, let us know. Be kind of intrigued. I'll bring the comment up on the screen if I can, but I haven't seen anything. So question mark for me there, but good luck to people trading it. Good luck to you. 100% buybacks. To be fair, Hyperliquid is 97%. So it's pretty damn high and outrageous as well. So there is that. Although, remember, they have their allocation that is coming to them, unlocking at some point in time. There's been a lot of speculation around that the last few days. Like, what's going to happen when they unlock all their tokens? Are they going to dump it all? So, they've got their allocation and it's coming. So maybe it's a similar situation, to be honest. Let's see. Right. Getting into some other bits and pieces. VanEck reiterated their 180K Bitcoin price target. This was an interesting one. I saw a short interview with former Barclays CEO Bob Diamond, appearing on a podcast with CoinDesk, articulating bullish case for Hype. He's part of the team that raised $888 million to do the Hype treasury, which was super interesting. I did not know that it was him behind it. And, he was speaking quite eloquently on how a lot of traditional banks, whether they say it out loud or not, are investing and getting their teams ready for the blockchain and the tokenization of everything over the next few years. maybe some of them are not being so vocal about it right now, but that is the plan moving forward. So very interesting to see that. And especially because Hype's a bit of a harder token to get hold of, I guess that is one where maybe a treasury might make more sense. In other news, before we get to the main stuff today, Pirate Nation, unfortunately, our friends at Proof of Play announced sunsetting of the original game due to the size of the audience that they attracted and not justifying further investment and operation. They are still building games that are on Abstract now with an arcade version of the game. I believe it's doing very, very well. So it's just the original game has been sunset. And then
And like I think one of the things we should talk about, this is one of the times where they're sunsetting it for like logical reasons. Like I feel like in our space, a lot of times when we see products or ecosystems like sunset, it's usually they're completely shutting down, the company is out of money or whatever. They're taking like a strategic decision, and I feel like people aren't talking about it, that sometimes, you know what, if you're doing it for a bigger purpose, that sunsetting a side project or one of the things maybe isn't that bad of a thing. So I feel like it's more, in some ways I know it's sad because I think like it was like a good ecosystem, but it's also like it has like a ray of hope behind it, you know.
Yeah, for sure. I mean, I completely agree with that. I understand maybe there are, from the perspective of someone that's sunk a lot of time into a game, maybe even sunk some money into the asset of that specific game, you've got this sunk cost fallacy where it's like, okay, I've put in so much time that is, it's worth nothing. But you can do that with everything. It's like, oh, I went to law school for 2 years, trained as a lawyer for 2 years, practiced for 2 years, and then I quit. What a waste of 6 years of my life. That's not the case. It's never the case. Or I think that perspective is always really limiting, because in reality, that period of time, you will have learned a bunch of stuff, created a bunch of relationships, developed in particular ways, which you then leverage for the next thing that you do. I think that is the only way that you can look at these things. But I can see how, there might be question marks around the assets and how they'll transfer over and how the value gets continued. So I do get that. But in the end, yeah, the company needs to keep it moving, I think, when they can see that there is no product market fit in a current thing. So I agree with you. I think that's the right move. Just a couple of other bits before we get into the main headlines today. We had the wrecked announcement of the mint details for the Base Lime drink, which is in collaboration with Base. That is going to be tomorrow. So keep your eye out for that if you are interested. And then finally, hot NFT collection Moonbirds had a little bit of a dip from 3.8 ETH to 3.2 ETH. Moonbirds really flying, realistically, though, compared to everything else in the market. Really, really has been the trade of, I mean, it's all happened so quickly in like a month or so. So big shout out to Spencer, who has definitely caught everyone's imagination here. Okay, that is the main set of news. Before we get into the main stuff, Rahim, because we're going to talk treasury companies, we're going to talk rate cuts, we're going to talk the SPAC with Chamath. Is there anything else is either catching your attention, anything from the roundup that you find interesting? Where do you want to take this?
Let's kick it off. I think we have like a lot of like really cool stuff to talk about on the headlines bit and stuff. So let's get there.
Okay, let's do it then. So straight into the main headline today is that I guess crypto is kind of steadying here as chances of maybe a rate cut in people's minds are falling. We've spoken about that not so long ago. And meanwhile, Trump meeting Zelensky to pursue a peace deal. So here's the first article that I was kind of having a read on earlier. This is Crypto Traders either Jackson Hole as Ether, XRP, Solana drop sharply in retreat. This is in reference to Jackson Hole, which is the symposium taking place in a couple of days' time. They're just kind of, it feels like people are very much waiting to see exactly what they did at the FOMC meeting. What was it, like a week ago or not so long ago, where basically everyone is going to be looking for any indication of a willingness to cut rates further. Last time when Powell was giving his speech at the FOMC, he was very, very reluctant to indicate any type of cut. It was quite hawkish. And so the market kind of sold off immediately. Although the market, I think, took some confidence from the fact that there were 2 dissenters this time, and before that there were no dissenters. So 2 people on the board, on the, I don't know what they call it. Is it the board? Is it the I don't know. There were two people in the group who were saying, we think you should be cutting, and I think the market took that with a little bit of confidence. Like, okay, well, that's clearly showing the trajectory of the direction we're going in here. So in a similar way, at Jackson Hole, I think that's what they're going to be looking for. And for the people, context for people who don't know, this is a 3-day annual international conference hosted by the Federal Reserve Bank of Kansas. I just pulled this up from Wikipedia. I'll just share it at the same time so you can get some visuals. 3-day international conference hosted by the Federal Reserve Bank of Kansas at Jackson Hole in the United States, attended by central bank leaders from around the world. They will discuss world events, financial trends, and the discussions at Jackson Hole are watched for economic news and specifically the likely direction of global interest rates. So that gets you up to speed there. It's been described by the New York Times as the world's most exclusive economic get-together. I'm sure they say that about Davos as well. Or maybe Davos has lost some of its sparkle recently. I think it's not been very well attended recently. Rahim, did you want to say something there?
Yeah, no, I was just saying, I was just thinking, like, it's funny you use the word sparkle. In my head, I've spent so much time with Gen Zs, I was like, it's lost its aura. That's the word that you're looking for.
I think it really has. I'll call it sparkle, you call it aura. I think that is the case.
It is crazy. So this is supposed to be his, like, I'm curious to hear your thoughts. So essentially, this is his last Jackson Hole before his term ends. Does that make this like a bigger deal with obviously, like, Trump has been pushing him to like cut rates and stuff, and I believe his term ends in May of 2026. So just like I was reading up on it, like how big of a deal like this conference is. Obviously it happens once a year, but I'm curious to hear your thoughts.
So I mean, bearing in mind, I'm by no means the kind of macro original political expert, but my view, I try to simplify these things as much as possible. And that's how I've navigated crypto in general and macro, the 2 things at the same time. My understanding is, my thinking is that it should be no more important because it is his last one necessarily. Maybe there's a little bit of pride and ego in a person to want to make it a better one. I personally don't think that'd be the case. I think he's been fairly professional, generally. And the market, I think, when Trump was trying to potentially gauge whether we could sack this guy, did not like it. So I don't think there's sufficient ego for him to make it about him. The main reason I just think it's important is because, the market's absolutely waiting with, increased eagerness to find out what direction they want to take this. Is there going to be any indication that he will be willing to cut in September, or will there not be a cut in September? That is what the market is obsessed with right now. It's the September Fed decision. Will they cut or will they not cut? I've argued on this show that the market has behaved as if there will be a cut so much. And so even if they do cut a small amount, I personally don't think it's going to do what everyone wants it to do, because people have run amok behaving as if it's priced as if it's definitely going to happen anyway, especially with how much pressure that's kind of been put on from the political side. So and then I guess the thing to layer into this is we've been speaking over the couple of days of why the chances of a cut in September has maybe reduced. Inflation data came in very hot the other day, and therefore it makes it less likely for him to get comfortable to make the cut. And that's why I think some things wanted to sell off a few days ago. Funky made a good point the other day about having to balance that with employment, and when employment numbers are looking weak also, then maybe the cut makes sense. But this is the thing, this is the balancing act that they are trying to do, or trying to get right. And it's not obvious the perfect way to land the plane, I don't think. My instinct is actually leaned again. I'm kind of, I'm like bullish crypto on the macro level, right? If you zoom out, but my instinct on the short term is that they're going to dig their heels in and they're going to be super concerned about inflation. I think they are concerned about inflation, so that's just my instinct. It will either be the smallest cut or no cut. That's kind of how I'm leaning at the moment. But Oxy's hand has been raised. We'll be very curious to hear your thoughts. We've got Carpenter wanting to contribute too, so we'll go around the houses here because we're just very curious to get some alternative perspectives here. Oxy, welcome to the stage, my man. What's your thought here as we look forward to Jackson Hole?
Yeah, no, thank you. I agree with everything you're saying. I think you're spot on for September. I think he digs his heels in a little bit, but reading between the lines a titch. So there's also a conference going on right now in Jackson Hole, put on by Salt and Kraken. And I know there's like the biggest of the biggest crypto people in Jackson Hole right now. And I'm certain there's meeting of the minds between all the people from the Fed and the Treasury, meeting with these people, because everyone's there at the same time. Everyone's there for the same reason. And I think there's actually something really interesting going on that no one's really talking about is kind of the collaboration between the two. Obviously, outside of all the the inflation and rate cut conversation, I think it's really important that these things are happening at the same time, at the same place, that no one's really putting any attention to. So just something I thought was interesting that no one's really talking about.
Interesting. Very interesting to see those characters all in the mix. Appreciate that, Oxy. Carpenter, hands down, but you want to come in here? Welcome to the stage, my man. What's your thoughts?
Hey, how's it going? Yeah, I wanted to agree, and with the whole rate cuts, I think they're gonna continue to, like you said, dig their heels in, but just push it off as long as possible because they are looking at the inflation, and so I think they're gonna. I don't know if we'll see it this year. Unfortunately, I was talking to my cousin Megan, who is like big into this stuff, and before talking to her, I really thought they were going to do it, and then she made a lot of sense on the fact that the outside of crypto, right? It doesn't make a lot of sense for them to cut rates just yet, and then until like the job status and stuff and all that stuff kind of changes. And then also I wanted to touch on the the Pirate Nation thing from earlier.
Sure.
Is what I liked the most about that is the fact that they, were super transparent, and then also put in the fact that they're switching into a more revenue-based model, right? They said basically it wasn't sustainable prior, and then with this new thing they have going on, Abstract, we've seen I'm not gonna butcher, I forget who the main guy is, which is sad, but he was saying how the revenue coming in on that just from the token basis was super high, especially if it went to an annual, if it continued, right? And so I kind of had a feeling something like this might happen.
Yeah.
But it sounds like the core parts of the game are going to continue, and I have a feeling big things are coming for them as well. And they're also making everyone whole, right? For the most part, they're doing that final tournament or event, so everyone can burn their assets and then get something that will be claimable or get some kind of reward for later on. So I feel like this is a lot of times we see people not quit, but close the door on a chapter, and there's a lot of people that get soured by it. But I feel like this is the first time we've seen a team do it and check all the boxes, right? And leave basically everyone happy as much as you can.
Sure. I think that makes sense. And yeah, I definitely do not get the sense that they are quitting in any way. It's just look, we need to pivot and focus on an aspect of the business that's going to be more profitable. So definitely agree with that take. As it relates to the bigger rate conversation, yeah, I guess we'll see. We will see on that front. We're looking forward to, I guess, the market's going to be very, very interested in the substance of the speech in the next few days at Jackson Hole. One final thing just going on in the background. Remember, we don't get overly political or geopolitical on the show, but it's something to keep in mind because it has seemed to accelerate the last few days, is that Trump has been meeting with Putin. I think he met with Putin a couple of days ago. Then he met with Zelensky just yesterday. And in terms of what happened, this is what the BBC had to say. President Zelensky of Ukraine returned to the White House on Monday to meet President Trump for fresh talks aimed at ending the war in Ukraine. Several European leaders were also flew to Washington to attend the meeting, days after Trump met Russia's President Putin in Alaska for a summit that failed to result in a ceasefire. There were some optimistic words, but by Monday evening, there was no concrete commitments to security guarantees or steps towards a peace deal. So, I think it's worth just keeping that in the back of our minds, not because things getting worse that I don't think necessarily impacts the market hugely. But I do think it's one where a peace deal or some cessation to the violence and the conflict does have a positive impact. So it's like, I think we've kind of exhausted the negative impact because, okay, they're still fighting. We're kind of exhausted on that side. But it means that on the positive resolution, which has kind of become unexpected, I think when things are unexpected, it has the best impact. So it feels like it's a good risk reward kind of bet now to think that should be resolved maybe after this period of time. Whereas
that's a good way to put it. Yeah, that's a good way to put it, because I was like thinking the same. And I also feel like when there is so much conversation that keeps happening over and over again, right? Like every time like there's a meeting, you see volatility in the market. You kind of see that like taper off like over time. That okay, if you've had, it's the same thing that we saw with tariffs. Like the first tariff announcement, boom, we would take like a big dip. The second one, the dip would get lesser. Third one, it would get lesser and lesser and stuff. So I think it's kind of like, I completely agree. I think there's, as awful as it is to say it, like there's less market downside, but there's way higher market upside with like a peace deal.
Yeah. That's my kind of view there at the moment. Again, without getting too political about the rights and wrongs of it all, we're just trying to analyze it from a market perspective, as always. So that's that. So curious to see how Jackson Hole turns out later. We've got 15 minutes left in the show today. We've got 2 topics to go to. Let's go to Chamath then. Rahim, we've got pretty big news, I think, and there's some strong reactions to some of the details here on Chamath's SPAC called American Exceptionalism. What do we need to know here? What are the key details and what were some of the key reactions, and what's your take?
So a quick history lesson. So obviously, like everyone knows Chamath right now because of the All In podcast or his bullish takes on crypto. But like he was like, his legacy comes from him like working at Facebook back in like 2007. But what makes him the SPAC king, which is what like media was like calling him back in 21, 22, is essentially he was using this ecosystem to merge a lot of companies. Maybe let's define what an SPAC is. Like a good way to put it, it's almost like, it's a very funny mechanism because it's essentially a blank check, which essentially ends up acquiring. So a company with a public company with a blank check ends up acquiring a private company and essentially kind of taking them public and raising money publicly. So it's kind of like a weird ecosystem to kind of like raise money without the actual company needing to go public. That's what the ecosystem is. And he's known to be the SPAC king because back in 20 and 21, he ended up doing this with about like 10 companies. What's interesting to note is that a lot of those companies did not do well long term. Almost like majority of them are down like 80%. There were companies in the biotech field, they were in the fintech field. None of them did really well. Virgin Galactic is down 80% from its IPO price in 2019. Opendoor is down 80%. Clover Health, which was the biotech company, is down 80%. So he's obviously gotten a lot of backlash that he does not have a good track record of actually doing this successfully. What makes it more interesting, yes, he's taken that stance of, okay, this is like American exceptionalism. So he's going to focus on DeFi, he's going to focus on AI and defense and things like that. So it's almost like he's using like the buzzwords that the government is kind of focused on. But like, it's funny, like the memorandum that came out essentially says that this is a very high risk bet and that you should be open to losing your money and he ends it with, and it ends with the statement, "No crying in the casino." And I just find it like super, super hilarious. It's essentially what he's saying. In principle, what he's saying, this is a way for people to publicly trade the future of like all the companies in like a package deal, right? So you have defense, which includes a lot of like AI bots or AI military ecosystems, and then you have DeFi and then AI infrastructure. So he's like, this is your essentially a degen bet from a publicly traded company into this entire ecosystem. So if you're investing in it, remember this is a high risk bet, and always there's no crying in the casino.
Yeah, I've got it pulled up here. That was pretty funny wording, I guess. I've never seen that in a official document before, and I'm surprised that, I don't know, I think it's kind of gross to use that kind, like, I don't know, it feels like you're kind of laughing at retail while you're creating the entity. Like, I don't know, there's something off about it. I think it should be presented clearly, but I don't know, there's something off about that for me. But just for people who are interested, the key details here, the reason, the full context for it is, he says, we believe that retail investors should only participate if A, this investment is a small part of an otherwise diversified portfolio, B, this investment is a quantum of capital they can afford to completely lose. So being like super clear, as you said, this is very risky. And C, if they do lose their entire capital, they will embody the adage from President Trump that there can be no crying in the casino. So, go on.
This is like what Mert he tweeted this out with the saying that like essentially TradFi is meme coins with suits. I get what you're saying in some ways, and I agree. I don't think we should be using this language. It almost feels nasty. You're laughing at the retail. Just to take a flip side, I'm in some ways I'm glad people are at least being honest about it. Like I feel like, people would like polish it, and you have like PR training to say this like eloquently, even though we realize like half of these like financial ecosystems are just like selling your dream. A lot of IPOs are just like, if anything, we've learned like they're just like not very different from highly speculative ecosystems. This whole SPAC thing, like I was reading, there's a lot of issues that Chamath has faced from SEC because, and a lot of people hate on it because this is like a weird speculative environment where they have this like blank check and they essentially go and acquire this like random ass company, which usually will be like super small, no one has even like heard of, and suddenly try to raise money on it. So if it's an AI company that's worth what, like 10-15 million dollars, and you're raising at like a 10x evaluation, people do that. People go degen buying that in the TradFi world. So there is a lot of like, which is why people hate his stance on SPACs and how he does them. But it is just funny. At least like in some ways, people are being honest,
Yeah, to be fair, maybe retail or other people require some type of language that is making it so explicit to them that the gamble that they're taking is really far on the risk curve and is more a gamble than even investing. So I don't know, maybe that is helpful, to be fair. The one thing I would say before I hand off to Funky to come in on this, and then Oxy wants to come in as well, is, as usual, with all investments, just check the vesting, check the incentives, check when the people who have bought in lower than you get to sell their short shares onto the market. That's what you have to do with all tokens in crypto, because you know that there's some big VC who has got a ton of tokens who may not be that interested in the product and therefore want to sell to the market, i.e. you. And that's where you got to check. It's the same with the SPACs. It's the same with the treasury companies. You got to check the details. Without knowing that, you just have no context for the valuation of a token or its potential future price performance. Funky, your hand is raised. Would love to bring you in here on anything to do with Chamath, his history on SPACs, or this new American Exceptionalism one.
Man, fuck Chamath. Like I used to have so much respect for this guy. I really looked up to him. And this guy screwed over so many people because he was cashing in on his name during COVID. Breads got buried in SPACs. I got buried in SPACs. I just don't like the fact that the fact that he even said that there's no crying in the casino. What an asshole that guy is. Like, I just have lost all respect for that guy. I'm sorry to go off on him, I would tell everybody to stay clear of anything he ever touches. He is not a nice guy. Like, I don't see it as a top signal, by the way, but I have very strong feeling. I'm the nicest person, and I'm not one to say something like this about somebody,
Sure.
but this guy has done a complete 180 in my mind in terms of just being, he is the extractor that we all hate on CT for TradFi.
And just to give people the clarity on why you feel so strongly, Funky, is it because the model is that, you know, they obviously are in at a certain price, or they receive shares at a particular price? They then take that to retail, say, buy this stuff, whether it's institutional investors or everyone else, and then at some point they're allowed to sell, right? And is it because they basically crush the price with their own shares and they then cash out, right? Is that the model, or how it worked with these SPACs in particular by him?
Yeah, I think it's a big part of it, right? Like, I mean, Rahim did a good job explaining what a SPAC is as a special acquisition, you know, because you're taking these companies that don't have to open up their books. They don't, you know, they don't go through a typical, like, an IPO process is very lengthy. This is something that goes through all sorts of due diligence. You have underwriters involved. A SPAC is a black box, to Rahim's point, where you basically, somebody's just writing a check, effectively buying the company, bringing it to market, and they're converting the SPAC on the back end. So what happens is the SPAC market itself gets super frothy, and people are buying in expecting the valuation when it actually goes public, the company. And I got buried in a number of those, like Clover. And then they sell off, it gets crushed. And I think they just wittingly and intentionally lure in retail plebs like me who think, hey, I'm going to get in early. This is because in our minds, many people think, like, this is like buying an IPO. I'm getting in. I'm getting in when it's really low. And then it's just, it's none of them have worked out. And I could say the same for Bill Ackman. I mean, although he only did it once, you know, whereas Chamath seems to be a serial repeater when it comes to these things.
Yeah.
Just a quick one, Funky, before we move ahead. I was just like trying to wrap my head around, like, how is this, like, because this is regulated by the SEC. Like, how does this, like, why don't we see a lot of this SPAC Ponzi's, for a lack of a better word, in the space? Because the model sounds exactly what you're saying, like horrendous.
I think honestly, the reason why we don't see more of them anymore is because of the backlash that occurred during COVID, because they were very, very popular, 19, 20. And I think too, you know, this kind of goes along with just the last bull run, just the stimmy checks coming from the sky. People had money, people were bored. You had everyday average people opening up brokerage accounts. If they weren't doing crypto, that seems like SPACs were another good way to think that, oh, I can probably multiply and magnify this free money I just got from the government. And so I think that it was just a moment in time. And like I said, what bothers me the most is that up until all that stuff happened, I had so much respect for Chamath as just a guy who really saw the future, was, you know, as a former Facebook guy, he has a great legendary talk. And I think it still stands, you know, my personal feelings notwithstanding, where he's talking to grad school kids at Stanford Business School. And it's like a 30, 45-minute talk. And it's really, really great advice about life and business and everything else. So, I mean, to be fully fair. So it's just, you know, I don't know. I have very strong feelings against him. Sorry for going off.
Appreciate it, man. Appreciate to have the additional context. I think that's super helpful for people to hear maybe the fuller story. People might be making a personal decision as to what extent they want to get involved in either that vehicle specifically or similar ones. So I think it's helpful to hear some of those stories from a few years gone by. Oxy, final take here, put a bow on this topic for us before we hit the final headline. Is this a potential top signal for this to be coming to the market now? What do you think?
Yeah, no, I guess speaking super quickly to the SPAC, why we don't see more of them. Like Funky said, a lot of people have bad feelings about them. And a lot of these companies, like the private companies that are being acquired, reverse mergered into, a lot of the owners of those companies want to go public in a good way, like a upstanding way. So when they get approached by a SPAC or something like that, the misconception, or like the conception of them is poor. So the owners don't want to go this route. And I think it's kind of ruined it for the people that do want to do it the right way and have a good image about them. They just pivot away from going the SPAC route. So I think that's part of it too. I guess speaking to this one in particular, I agree. I think it's not a good it's so vague, like what they want to do with it. It's like, I don't think it's going to be a good fit. That said, I do really think there's a opportunity for a public company to work in this DeFi space. Like, it doesn't have to be max risk, max leverage. There's like not like low risk ways to earn very good yield in the DeFi space that I think a public company doing it the right way with smart people that know what they're talking about and know what they're doing. I think there's actually a really interesting opportunity that hasn't been captured yet, that I think this might be the opening to it. And the concern I have is it's gonna blow it for for someone else trying to do it in the right way. Someone's gonna be like, oh, this company's trying to go into DeFi. It blew up. It went to zero. It was all max extraction. But I think there's actually, like, if someone was going to do it the right way, which this is not, I don't think. I think there's an opportunity there. I'm just worried that it's gonna kind of ruin the image for everyone.
Yeah, I think the probability of both of those things is high. One, I think, is it going to ruin it for a lot of people? Yes. And is there still a huge opportunity for on-chain funds to take advantage of the additional opportunity that is brought by crypto? Yes, like I think VC is going to really struggle in crypto. There'll still be huge successes. I don't think VC is dead entirely, but the model that was being used for a long period of time in crypto is not going to play out as well as it did in the past. There will still be VC success. It's silly to think that there will not be, but that specific model, I think, will not work as much. And I think a more liquid fund where you are taking advantage of various opportunities as you see them, whether that is entering into these ICOs like Plasma, for example, which is like, okay, lock up your money for this period of time, wait a few months and get a 4x. Like, that is a pretty useful, at minimum 4x, probably based on some of the pre-market data. So, doing something like that, then taking those winnings, putting half of it on Felix and Hyperliquid, earning 10% on your USDT. Like, okay, there's smart contract risk, there's various other risks, there's risk with everything, right? But I feel like there's a huge opportunity there, given that the traditional market's usual kind of standard rate for performance is so low, and people would be delighted for 7 to 8%, let alone anything pushing past 10 in a year. So I agree with you. I think it's a huge opportunity there. That's something we're thinking about a lot too. But let's just hit the final headline now to get you completely up to speed with the final interesting detail. So this was the news. I'm going to pass over to Funky for some commentary here. This is the news that the strategy has updated its financing agreement. Udi explained how that was done in this short tweet. He said, up until yesterday, strategy was not going to sell more master to buy more Bitcoin until the MNAV hit 2.5x. That being the kind of the value of the shares versus the net asset value. Obviously, the reason why all these treasury companies are getting spun up is because they traded a premium to the net asset value. Whereas now, with this change, strategy can sell master to buy more Bitcoin. Just want to quickly take you through, before I pass you over to Funky, this interesting Blockworks set of graphs that actually have all of the treasury companies and their current market caps and their MNAV. So I'm just going to make it bigger. So I think hopefully we can get all of the detail on one slide. So here you go. So you got master at the moment trading at 1.61. You got BMNR for ETH. This is Tom Lee's trading at 1.45. This is, according to the data, if we can trust it, it was updated. When was this updated? I saw it say, I'm sure it said it was updated like yesterday. I can't see where it told me that now. Anyway, assuming this was updated yesterday, because I'm pretty sure I saw it somewhere a moment ago. So look, this is the point. Master's trading at 1.61, Bitmine's trading at 1.45. After that, you're getting really close to like there not being that much premium. SBET at 1.08. You've got a couple here. BTBT 1.4, SMLR 106, UPXI 1.26, BTCS 0.68, which is already under. And I guess the reason why I'm showing you this is because, look, a lot of these are still above the premium. The whole point of these is that there needs to be a premium. If they don't stay above the premium, they won't be able to raise more money to buy more. And so the game is over when they can't raise more to buy more. And so there must be a premium. And I think the question that's kind of haunting this side of the industry is, will these continue to trade at a premium? Is it ever not going to be the case? And that is the thing you want to keep an eye on. So this dashboard, I think, is incredibly helpful. So that's something you're going to have to want to keep an eye on. Funky, want to bring you in here. We're running out of time for the shows. We're just running a little bit over. What is the key takeaway for you with this kind of adjustment at MicroStrategy? What are your thoughts?
I don't like it. And I don't like it because I think people were so excited by the original vision, which is you do not sell any ATM below 2.5 on the MNAV. And the reason why I think people like me, and I think Signal already dipped, but she went back and watched the entire earnings call after I had given sort of the breakdown with Legendary a few Fridays back, was because having it set at 2.5 before they actually, and even at 2.5, they would only strategically issue more shares. So I think at the end of the day, why I find this problematic is that this would in effect force the market to chase the share and actually drive up the MNAV to where he believed it should be. And that started around the $600 mark. MicroStrategy shares have been effectively, we like to talk about ETH being a stable coin for a long time. MicroStrategy really can't get by the $400 mark. That seems to be where it's kind of just hanging out and stuck, which puts that, I think, somewhere in the vicinity of 1.6. So they really wanted to use only below 2.5 as the MNAV to either pay those dividends on the ones that do pay dividends, like Strike and Strife, or to strategically pay off debt for, I think, some of the convertible bonds and not issue shares. I was fine with that, using it for those specific reasons. And so I did link it below. I think I tagged you. So if people wanted to see it, the new guidance now effectively allows them to tactically, they just used another adverb, right? And as a former teacher, I'm sure that probably drives you nuts, to tactically issue shares. Whereas the above 2.5, it was strategically issue shares. And if it went above 4 on the NAV, it was like an all-out blitz. Like, we're just going to buy as much Bitcoin as we can. Now, if you look at Saylor's last 2 buying announcements, I think ICO Beast even made fun of one of them because they bought like a not even like barely double digits amount of Bitcoin, like where he bought, I don't know, it was like 60 something or 40 something Bitcoin. Strategy bought. There was 155 Bitcoin buy on August 11th. More recently, there was one for, I think it was just yesterday, they announced 430 Bitcoin. But what we're used to seeing is them issue massive amounts of shares or using these new financial products to buy thousands, sometimes tens of thousands of Bitcoin in one go. And so I think they're caught between a rock and a hard place insofar as it's evident that when MicroStrategy buys, it pushes the price up, right? Although in the most recent one, buying 430 Bitcoin, we had the dip. But typically, you'll see it on a weekend. He says there's not enough orange on the chart. And then all of a sudden, there'll be an announcement on Monday that Strategy acquired more Bitcoin. I think introducing this new, yes, it allows them to buy more Bitcoin. But at what point are you going to have shareholders like me get tired of being diluted? To your point, B, what's going to happen if they can't keep up with the MNAV and if it doesn't continue to rise? So now I just think we're getting into an uneasy place, at least for me as a shareholder. I don't really, it doesn't matter because like all of mine is a moon bag, which you love, because I took profits on MicroStrategy in the previous run when it ran to 1,200 for my first buy in 2020. But be that as it may, I just wonder if how much other shareholders are going to willing to be diluted when they do these at the market offerings and effectively issue more shares to buy more Bitcoin. I don't know. I guess we'll see how it plays out. But I just didn't think it was. I like the original version of just 2.5, make the market chase it. Once it gets above that, then you start issuing more shares.
Very, very interesting. I think that's a really, really helpful explanation, Funky, because this is definitely an arena which I think people are less confident on. So it's good to get people up to speed with what is going on there. And I guess we have to keep a close eye then, right? That MNAV number, as I was suggesting, is incredibly important to not just the health of, I mean, realistically, we're in a scenario where the health of strategy is going to have knock-on effects for the health of the rest of the market. It is the leader in the same way that if Bitcoin struggles, the rest of the market struggles. If strategy encounters issues, I suspect very strongly that down the further risk curve for the rest of the treasury companies, it's not going to be any easier for them to raise if strategy themselves are having issues. So we'll keep an eye on it. I'm definitely looking at that Blockworks chart a lot at the moment, and I don't know, just thinking about it a lot. There's a lot of treasury company nonsense. Some of it is justified, some of it is a bit risky, and it's on my mind. Definitely something to keep an eye on. For what it's worth, just circling back to the Chamath thing, I do think some people, I can't remember who said that they don't think it's a top signal. You know, it's certainly not the start of a cycle signal for me. So I'm not saying it's to the end, but it's not the beginning either. So as I said, my strategy in general has been, maybe from asides from Bitcoin, I'm DCAing out over the next, who knows, however many months. Every now and again, I just clip out something from somewhere in my portfolio. It's not an entirely sophisticated strategy. I don't want to spend more time and thinking on it than that. But like, over the next few months, probably a net seller. I'm not looking to load up here before Bitcoin goes to 200. Like, I think hopefully it will, but I don't need to capture that move because hopefully you've been part of the move before. So definitely something to keep in mind as we continue to navigate. But that was a very interesting conversation, guys. That's the end of the show today. Hope you enjoyed it. As always, kind of covered a variety of interesting aspects, obviously leaning a lot into this treasury company conversation, which we need to do very much so at the moment. But Rahim, thanks so much for joining me as co-host. As always, thanks to Funky and Oxy for their contributions, and Carpenter coming in as well today with some good takes. We do this every day from Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, and Apple and Spotify podcasts, if that's where you prefer to consume your news. Thank you so much for joining us. We will be back again tomorrow. Same time, same place. Have a wonderful day. Bye-bye.